So you've agreed to purchase a car, but have you asked all the right questions before you walk into that office? Asking the right questions on a car deal can give you the confidence that you've made the right decision. There's no such definition of good deal. It's subjective. However, the lack of knowledge and confidence can definitely make you feel like you got a bad deal. There are two types of questions in this world: open-ended questions and closed-ended questions. Open-ended questions give you great conversation, build a rapport, and better fact-finding results. Closed-ended questions, they only result in yes or no answers, which is very difficult to learn anything. In this video, I'm going to teach you the questions to ask that finance manager before you sign on the dotted line. First best question to ask is, how does the manufacturer rates compare to the lenders that you guys use? Now, this is a big question that I get every day, especially on the Corvette, and I tell people all the time, GM Financial does not give you good rates unless the manufacturer incentivizes them. So never ask really too much with GM, but Honda, Subaru, Toyota, all those places give amazing rates that most likely the banks on the outside can't touch when they're a captive financing. So make sure you ask those, because you can get 0.9, 0%, 1.9, and all sorts of crazy rates when the manufacturer backs that lender. Does the bank have a prepayment penalty? That is a great question to ask. Now, prepayment penalties are pretty much a thing of the past. They're not out there anymore, but there are a couple banks here and there that I deal with that does have them, and I just don't know nationwide who has them. Most of your captive financing banks don't have them, so you're probably safe there. Definitely make sure you ask that question, and also at the end of the video, I'm going to link you to how to read a bank contract that I did a video a few years ago. There is a hack around prepayment penalties. Let's say you make a $500 a month car payment and you have $20,000 left on your principal balance. All you have to do is make a $19,500 payment and then just let them deduct the next payment of $500 out of your account, and you're good to go, and there's no prepayment penalty. If there is, it's only going to be on the $500 or a very small fee. They do have some goofy prepayment penalties out there, so make sure you ask that question. Dealers love to play games with your credit score. The lower the credit score, the higher the rate is, and they'll use that to their advantage. So make sure you ask the dealership finance manager which credit bureaus were pulled from me today. There's 3 credit bureaus that dealers and banks use, and they will show you your lowest credit score to get you to pay a higher interest rate. So you also want to ask them, will you give me the risk-based financing notice for all the bureaus that you pulled? The reason you want to do that is because dealerships will use your 680 credit score and tell you that you qualify for a higher rate when your TransUnion score maybe had a 720, 730, 750 score that would result in a lower interest rate. So when you ask for all of those to be shown to you, they can't hide behind that lower credit score. A great question to ask is, what term gets me the best rate? Just because you finance for 36 or 48 months doesn't mean that the banks are going to reward you with the lowest interest rate. In the past, that used to be true, but I've seen better interest rate on 72 months than 60 months. Banks think you will pay the car for a longer term so that they can reward you with a lower interest rate on 72 over 60 or 60 over 48. They will do so. If you plan on paying it off in a shorter period of time, hey, take that lower payment and take that lower interest rate and pay it off at your convenience. But always ask which term gets you the best interest rate. Hey, make sure you check out the awesome ChevyDudeStore.com. Get your swag, support the channel, and every time you make a purchase, we give a portion of the proceeds to charity. And that charity usually always has to do with helping kids out. These next couple of questions are really going to confuse the finance manager. No customer has ever asked these questions to a finance manager, but if you ask this too early, it's going to backfire. So make sure you ask these questions after they reveal the interest rate that you qualify for. This one's very specific. You've got to ask it this exact way. How many banks gave full approvals? Now, the word full means exactly how much money you asked for. If you're asking for $20,000, some banks will say, listen, we're only going to finance $17,000. Some banks will be like, yeah, $20,000 for this person's not an issue. Make sure you ask that question. If it's 2, if it's 3, if it's 4, you're going to find out why that question is important to ask. So after that question is asked and answered, the next one you're going to ask is, which bank are you going to write the contract with? A terminology used in the car business is full call approvals. We're using the terminology of full approvals, but you want to ask that question because the next question is really going to get them. And that would be, why did you choose ABC Bank? I'm telling you, they have never been asked that question before. And there's a reason to that question as well, because there could be some underlying reasons why they chose that bank. It could be because they get the best finance reserve, may not get the best interest rate, but it gets the dealership the best finance reserve. Unbeknownst to most people, banks are not always saying that you can mark the interest rate up. They're basically saying, listen, you can write it at this amount. We're going to pay you 5% of the amount financed. If you start marking it down because your customer is being competitive on rates, we'll pay you X amount, we'll pay you X amount, and they can start going down. So the dealership can go down, but they can't go up from that call that the dealership showed you. And one of the biggest misnomers is out there is like, ask the dealership to show you the callback sheet. They're not gonna do that, I promise you. You're just gonna start a battle and start a war, so get that out of your repertoire if you've learned this from anyone else, because they could use this same exact bank. It's like, oh yeah, right here's the call sheet, and they're getting 5% of the amount financed. That's not a bad thing. You're not paying for that, but maybe you could get a rate somewhere else lower. Because we're gonna ask the next question of, did another bank approve me for a lower interest rate? Now watch the finance manager's eyes. They're gonna pop out of his head. Because they've never been asked that question before in that direct of a question. You're trying to find out if that there is a lower interest rate, and if you also have asked already which bank, that you can say, listen, I bank with PNC Bank, I bank with Huntington Bank, I bank with this credit union. Do you guys write with this credit union? See how all these are open-ended with linking questions? If I just asked a yes or no question, I would never get any of this out of the finance manager. I've been seeing this question pop up on the channel all over the place, and I'm telling you, it's the worst question to ever ask anyone at a car dealership. And that would be, is that the best you can do?
Is that the best you can do?
The reason why this is a horrible question is because this is a closed-ended question that's gonna reach the verdict of yes being said the vast majority of the time. As you noticed in all of my questions, they were open-ended questions with linking questions available to ask. We have 2 of these and 1 of these, and we have to use them accordingly. If you found this content awesome, make sure that you hit the subscribe button, turn your bell notifications on, share this with a friend to help them out, and leave a comment below.